following content is a technical analysis on NIO Incorporated, a company of the consumer cyclical sector in auto manufacturers, here off the daily interval. And here we have a nice, clean, well-defined, bullish falling wedge pattern with a nice divergent low with positive and or bullish divergences, really constructing and establishing themselves on all three technical momentum indicators with nice green candle closes above the zero line threshold off the oscillator histogram here. And there had been a stack full of volatility here off of Friday's candle close. Definitely not the most bullish closing candle there on Friday, but it just speaks volumes of the volatility that could ensue here in the stock, whether that direction is both to the upside and or downside. Whereas we have the nice 50-day exponential moving average hovering down right up above this primary reactionary high downtrend line off the September 2022 reactionary highs, multiple clean reactionary highs to strengthen its validation there. And bull traders, long traders, they want to see a solid daily candle close and pop that level, call it a triple line of an inflection point off that gap resistance with the 50-day moving average and primary uptrend line. And I believe a nice clean candle close above ought to issue a buy signal on a potential pullback, and within that pullback zone down to gap support there, coinciding with this primary downtrend line, issuing a nice clean risk reward ratio to the upside up to that first target 950 price resistance for 15.3% in gains, up to the 236 fibs retracement, 1107 price resistance, which will coincide with the 200-day moving average there, and then ultimately down up to that third target 1313 price resistance, call it the 382 Fibonacci retracement level for about 60% in gains. And as I've really preached in my previous videos here, usually when you break back inside that trading range, the odds are increased for a move right back up to the top of the trading range. Whereas we have this nice false breakout candle close below here, back tested at 2, 3, 4 days, almost a full trading week of a session there, and completely crashed down to the bottom of that trading range for a 27% crash. Again, back tested 3, 4 days in a row, 4 days throughout that trading week session, back to the top of the trading range for a 35% crash. Back tested it 2 more days there, rejected, and it was a 25% crash there on Brown. And then you had multiple reactionary highs right amongst the bottom of that trading range, got rejected, came right back up, got rejected once again, and then we popped that level. When we popped that level, we ended up back testing off that primary reactionary high downtrend line 2 days, call it almost darn near shy of hitting it 3 days in a row, rejected again, back tested against that primary reactionary high downtrend line once again, and sank right below that 50-day moving average, and just never was able to renew its health there. Back tested amongst that 50-day moving average, and here we are, just been consolidating ever since. And again, that is just, I believe we've reached a key inflection point. Whereas I am not, none of this is financial advice. I am not the best long trader. The vast majority of my trades are issued to the short and to the downside. But as for a short trader, you need to know when to cover your position. And a lot of the people who have been short in this stock have already had 65% in gains just as of October of 2022. Oh, I can all but guarantee you that they will have second thoughts in closing their position on a solid breakout above this triple line of inflection points, whether it's algos, machines, institutions, big hedge funds. I can all but consider that a breakout move amongst this key inflection point ought to issue a secondary opinion on when to cover that profit, and a big move to the upside could occur, especially if long traders, dip buyers fuel into the trade there, causing the price to go up even higher. And again, I'll take away all the lines here. Really, of what's more significant is a nice, pretty well defined, not the most aesthetically pleasing 3 inside up bullish continuation pattern that I believe should and will be respected. And that is a lot more of a higher probability candlestick formation pattern that could have this stock rolling to the upside, especially with just a confluence of factors and evidence that continue to build amongst the technical momentum indicators in this key inflection point. What will really take this stock off, in my opinion, is going back to the Hang Seng index in the Chinese markets. And we are definitely testing that key inflection point of the 200-day moving average, coinciding with pretty pretty major strong resistance in the 1913.80 price resistance. And I believe if that level gets popped, if we take that level out, I believe there will be a renewed long trade with a potential of increased liquidity being rushed back into the Chinese markets here, taking NIO with it.